Hello, nice to meet you all. My name is Walid Eljaafari. Thank you for joining us for this panel. So just to introduce myself shortly, my name is Walid Eljaafari. I'm the CEO and co-founder of Algonomia. We're one of the tech companies that you can find on the other side. And so what we propose are tech solutions to modernize and automate your international tax department. And we also have a Pillar 2 solution. That's why I've been invited to talk during this panel. So we have the chance today to have a very wide range of profiles in terms of companies and persons who represent them. So we have first Daniel Buschmann, who's VP of Global Tax and Transfer Pricing at Stada Arzneimittel. My Deutsch is not super. It's a 4 billion euro revenue company that focuses on pharmaceutical products, and so they're right in the center of who's impacted by Pillar 2, and he's going to share his experience about this. Second, we have Dr. Marta Pankiv, who's also heading the tax department of an international company, Tricentis. It's a US tax firm who has also a lot of presence in Europe. She has an experience that is very broad because she had the chance of lecturing in the University of Lausanne on transfer pricing matters, so it's going to be a very interesting take. And finally, we have Jan Hayek, I'm not certain if I pronounced right, so sorry, who's head of tax EMEA at Robert Bosch, and who's also teaching in the University of Prague, two of them. I'm also sorry I haven't mentioned that you're also involved as a consultant in past Daniel, so sorry for that. So today what's very interesting is that we're not going to only talk about Pillar 2, a lot of people have done that so many times. We are going to talk about the impact of Pillar 2 on the tax function and how it forced everybody to modernize and how it transformed a bit the job of the tax function. And the first question that we're going to tackle is the question of data, because Pillar 2 is a very data-hungry process that companies have to manage. And so this creates a lot of challenges, both in governance and in data management, and finding the right people and data points to be gathered. And so I want to ask this first question to Daniel. How did you manage all of that? How did it transform your work at the start?
Thank you for the question. So maybe we start back when Pillar 2 was introduced, and we heard it this morning. A couple of years ago, it was a very quickly decided approach by the OECD and our countries involved to start and kick off this project. This is actually also, we looked the first time into the kind of fit gap analysis, what kind of data points you need, what do you have. I think that's a classical approach everybody of us went through who was involved in the Pillar 2 design and structuring the process around it. We have been in a lucky situation back then that we started this journey a little bit up front already due to other reasons. So we were at a point already where we started to centralize our tax data and not as a kind of separate data hub. But we said, okay, let's see what do we have in the company already, what are we reporting to the external world, and take it from there. See what can we use, what can be taken from what we have already, what do we need in addition, and then decide, okay, are we going kind of full approach to collect all kinds of data points from all countries, or selecting a more prudent approach, saying, okay, what do we really need, or do we expect an impact? Still having the architecture in place that if we need more data points, we can collect it, but at the same time, we have the target not to overburden the organization, because we have only like one central tax team in the headquarters in Germany, and then there's like more the finance organization in the countries, which of course are part of this global governance project. But they are not really the tax experts, so we want to make their life as easy as possible. But at the same time, of course, we need to be very consistent what we are reporting on a global level. So this is a very good chance for tax departments, I would say, to really align what's reported to tax authorities And secondly, we put for ourselves a policy in place, just outlining the framework. This is something I really recommend to do. Put in a rating matrix for the countries and say who is doing what, to be really sure that you are doing the right things.
Oh, thank you, Daniel. When we prepared this panel, you had a very interesting presentation. No, please, not yet. Sorry. You have described a bit how you, I'm not sure you can share it with everybody, but you have worked a bit as a project management officer for this technological change. So can you describe a bit technically how you approach this data collection process?
Sure. So, of course, in the beginning we had like basically make or buy decision to take. As we had some kind of basis already in place, we decided to go from scratch and build a solution by our own on using Power BI, using our data platform from Microsoft, which we have already. And for missing data points, for example, we use Power Apps from Microsoft to really leverage what is in use in the company already. So. For us, this was the right approach, I would say, really, to build on what we have and enrich it by a separate question to collect data points, having the structured format, and then you can put it to your text data hub as well, and still again have like one single source of truth for CDCR, for text accounting, for Pillar 2. So you're really having only one data hub which you're using for your kind of reportings.
Thank you, Daniel. So what's very interesting is to see that when there is a make or buy decision to make, all the tax professionals are now in the middle of this decision. And so one of the small questions we want to ask to the audience, for those of you who have been there, and here Natalia, please, if you can go to the next slide, is, well, how did you do it? Did you entrust something to an external provider? Did you build it yourself? So you were able to scan this QR code and to answer this question. And we want to see a bit what drives the public. We're gonna wait a few more seconds. For the people who are on the last data point, don't hesitate to come to our booth. Okay, so we have 70 respondents so far. I don't know if more will want to take part in the yes, 18 is good. I think we ordered them the right way. It's very cool. So here what we can see in terms of general movement is that, well, the type of decision and use of the data of the technology that has been chosen by the majority of the company is to repurpose what's already existing, and I think it's you maybe are going to react the same way. It's linked to the safe harbor rules that makes it more likely that only a few companies are going to be impacted. And we also see that some 11% are still not yet completely decided, and we also see that in France where a lot of requests for proposals are only being started right now. This leads me to maybe the second part of the panel that we wanted to discuss, and it's a question that I'm going to address to Jan, because what Daniel has introduced is this notion of choosing your own way of managing, so it's not the question, it's not the question is not about what tool you use, but how you are going to use it. So the actual use of the technology, the substance and the methodology will be defined by the tax function, because you need to know whether you're going to be maximalist, meaning gathering all of the data points and trying to be able to apply all of the computations and then only see what jurisdictions are going to fall under the safe harbor after having collected all the data. Or you can have this minimalist approach, which is also very legitimate, is to only collect the data points for the entities that are not covered by the safe harbor. Some clients that we have chosen this maximalist approach. It's a very interesting prospect and project. And so the question I want to ask to Jan is, what are the challenges? What is the cost benefit? What is the logical analysis that drove you to go into that deep of a project?
Actually, we had a short discussion, short pre-alignment, and Daniel was mentioning that the approach in startup was basically minimalistic. So only to have a look on the countries, jurisdictions which are really affected. And, but at Bosch we decided to go in a slightly different direction, and maybe I can ask Natalia to present this one slide. And I hope that I'm not going to scare you. That's quite a very, very simplified diagram. So to really understand, I think you need to take into consideration that Bosch is present in multiple businesses. So we are present in automotive, consumer goods, we are present in industrial technologies, we are present in some minor part of the healthcare and so on. But we don't have a horizontal consolidation systems on the jurisdictions. We have only vertical consolidation. So basically each Geschäftsbereich, each division has their own consolidation and reporting scheme. So this is where we started, and we had some data available, but those were rather fractured, because even before that we of course had, for instance, tax compliance enabling solution from SAP, which still has been running on kind of RP scheme, also on S4. But that used a kind of a data which we couldn't use because the data were not complete, and they were not really able to serve also this kind of consolidation, jurisdiction consolidation level. So basically what we created, we took the data from all the vertical and horizontal machines from all the systems, which was rather over 100 systems, vertical systems at Bosch we have. Because we are not really good in pushing our own system into the newly acquired targets. So you can imagine we acquire a very small business and say, you can keep your own system, which is a very bad decision by the way. So that gives quite a big landscape of the system. So we needed to come up with a certain database, which is a red lake. Nowadays we call it red mesh. And there we put all the data from all the systems. But it's of course not sufficient, because we talk about FI data, financial data. We don't talk about the data which are considered as master data, for instance. So about the legal company codes and so on. This we had in a completely different system, in the master data system. Okay, then we needed to move it as well to the central database, which you can see with the abbreviation of OHAB. And then, because still we have some part of Bosch which is running in a completely different environment, which is BSH, the consumer goods, Bosch Siemens Hausgeräte. So this is something which for the home appliances mainly. Then we needed to put that into the scheme as well, of course. And some of the data were not still available. And these we were taking from our finance reporting system, which is HFM, Hyperion Finance. So you can imagine how all this, was challenging to orchestrate, and at the end of the day, come up with a certain consolidated jurisdictional view. For that, we used an Oracle, which is an EPM cloud. I don't know whether someone has some experience with that. It works quite well, but you need to consider we were on the beginning with the implementation. So if you are now in the phase of implementation, or if you were most likely after us, then you most likely benefited from what we did with Oracle, because there was a project between KPMG, Oracle and us in order to put it all together in a reasonable way. It's not very user-friendly, but it's reasonable. And I will give back basically to my words to Walid. So that's the way of the maximalistic approach, and it's very, very complex. You have many data points, so to orchestrate that, it's quite a challenge.
To go in a bit more detail, because we have done this process with several groups, you can see in the middle a database that is about legal entity company codes, permanent establishments, and tax IDs. Sometimes the big struggle is being able to gather that from the legal teams, because the legal department is not used to have this level of scrutiny on the quality of the databases. And so some of our clients, they have in France a tool to manage their legal structure, where you will have all of the shareholding links, the ownership interests that you need to gather for Pillar 2, and well, they're managed a bit manually without very good quality. And part of the elements that needs to appear in this pipeline is how do we ensure that there are no holes in the ownership chains? How do we ensure that the ownership interests are correctly computed? Because in the end, this will impact the number of subgroups that you will have, the minority-owned multinational enterprises, the hopes that you will have, and so on. So it's a very critical element, but it is not managed by the tax function. So the tax function in its modernization becomes a quality controller of the work of other team members in other departments. And so that's something that is a bit new and very interesting to see around.
I think you're totally right, because what you need to do at the beginning of what you all needed to do was to define really what data you need to do the calculation. And this is our text role, because even if we have our colleagues in the IT department, then of course they want from you the information which you need to collect from the legal entities to be able to somehow, I would say, develop a scheme and so on. So our role is also a bit of the understanding where we all have the data and what we need, which is especially in Pillar 2 at the beginning, that was not easy even to understand, whether we need to have some sort of additional data or not.
I'm going to ask you another question, Jan. I'm sorry, don't hesitate if you want Daniel and Marta to answer it. And some of the clients that we work with, they have this issue of consolidation levels, intermediary, where some reporting units that are not legal entities, well, they only present one set of data, and the end users, they need to split them. They need to split them to have the divide between the legal entity and its permanent establishments, or in some worst cases, you have entire subgroups that are consolidated in one single element. Maybe could you present us what are the issues there?
I think our major issue was to get this jurisdictional consolidated view, because as I mentioned, we don't have it, and till that time we were not even thinking about that. It's somewhat needed. So we needed to really go into the local company codes and consolidate the respective company codes. So basically, legal entities which are with a seat in certain jurisdiction or with a PE in certain jurisdiction, we did the consolidation. Of course, then you come across the problem with the consolidation which you do not normally do, which is the intercompany transaction within one jurisdiction, which is not the way how you do the calculation of your local EBIT, profit, whatever. So this is something where we needed to take some simplification measures in order to be able to at least put the consolidation into the right scheme, so we know that some eliminations, for instance, doesn't work.
And for the three of you, maybe another question on this data structure and unified process. I see there is an element called questionnaires here. This is also something that Daniel explained in his Power Apps. There are some data that are not in the chart of accounts, and that you will have to gather from the tax controllers, from the accountants. So how hard is it for you guys to force the teams to split the chart of accounts or to manage the change in applying a new data collection process?
Maybe I will take this one. So in our case, we are a tech company, and we are a US-based tech company. So we started with Austria as the initial headquarters when I joined, and then we merged with the US company. This is how we became US group. And I think the challenge with the questionnaire to different departments is actually to find the right contact. And the way I'm dealing with this, I'm going to the CEO, Chief Accounting Officer, and CFO, and just presenting the case why you need it. Because it's much easier to talk at the top level and align, on timeline, what data you need, why you need it, what format you need, and then it goes down to the respective controllers, because in our group it's primarily controllers who will collect the data and who will talk to you, tax people, to understand what you need. Because if you go directly to accountants, they will go all the way up to understand, if they can provide this data, if it's sensitive data, for example, if it's payroll, or some specific details that we would need from them. They will not provide you right away, right? Especially if you are talking about, US, non-US. So the way we approach it, the way I approach it, we always have this stand-up call with the finance leaders, and this is where we raise the issue. We need to have it, because otherwise it will impact our cash flow, it will impact our good standing, as we call it in the US, right? So it's very important for the company to be in good standing, meaning that we are not facing any penalties, any court cases, whatever. And I think this helps. This is how you establish the kind of platform to whom to talk. But then the most difficult part, definitely, to have this communication with the controller and to collect the data you need, right? Because I think, Jan, you mentioned about the quality of data. And that's the challenge, because you usually would collect something, right? Like, I don't know, even tax ID. And you will believe, yeah, this is the right one. And in Canada, for example, we have slightly different tax ID for different purposes, right? If you put the incorrect information in the whole system, then it's much more difficult to go and correct it. And you spend much more time, to do that rather than do it from scratch in the correct way. So I think, yeah, the challenge here is just to make sure that you have the correct controls in place. You're not just relying on whatever you are being sent, right? Because at the end of the day, you as the tax department is responsible for the data you're collecting and for the reporting itself, right? So it's on us to make sure that whatever we are receiving from controllers, accountants, finance department, this is what is really correct, and basically you do not need to go back and correct it anymore. Another, just a quick one on legal side, right? So with legal department, I think it's easy, at least in our case, because usually when I talk to lawyers, they would understand. So somehow they are closer to tax than probably controllers or accountants. Not always. I'm just talking from my perspective. And we have the legal management system, where we keep all the shareholding, all the changes in the structure, new companies, new acquisitions, PEs, branches, and so on. So that makes life easier, definitely, because whenever the change happens, we have a group of people who are informed of such changes. So, for example, any M&As, any restructurings, whatever. And I think that helps, because coming back to the right people that we talk to, you should be in that group. So make sure that you as a tax department, you are included in the chain. Because once you are in there, it's up to you to decide how you want to use this information. But the most important to be in there and not to receive it, a couple of months later when we had the change in ownership, but we didn't know about it, right? And then the report may be incorrect or whatever implication.
No, it's really right to stress this political aspect of managing a tax data process. One of the groups that we tried to work with in France in building a proof of concept for this P2P computation, they had a legal management system, but there was a bug on their side, and they lost part of their data. It's a group with thousands of entities, and so we were not able to move forward for months with them, just because the data was not available, and so we had to be created using what was stored in the consolidation tool to get the ownership interest, and in the end, it means that this entire P2P process becomes dependent on other processes and other teams, and so being able to manage this governance is really key.
Maybe, and it's a good that you mentioned that, Marta, because we are talking about different layers of quality, because here you need to ensure that the quality, for instance, of the shareholding structure is precise. So basically you cannot just rely on the fact that, yeah, we have it somehow, but with respect to that, because you would do a completely wrong calculation in the particular jurisdiction. However, you do not need to focus so much on the transactional data. So basically, whether some particular posting is correct one or not, with respect to the overall ETR in the jurisdiction, the level of the significance is not there. But the quality focus should be on a different type, rather the architecture, scheme, company codes, and so on, the structure, rather than the accounting posting level.
Maybe one point to add from my side, I think we should also see it as a chance for tax department, because what you're explaining, the master data of a company, for example, somebody's mixing up with tax ID. We had 3 different tables where we had kind of master data for legal entities. So now this is, I would say, the chance also for tax departments to discuss with other departments, legal, group accounting, what should be our single source of truth, and then we can decide together with the other departments, okay, we put all kind of master data into this one, who is responsible to maintain it, and then the others can really rely on it. It's a one-time effort, but I would say it's really a chance to become more efficient in the long term, and also make the life of tax department easier in the long term.
Well, thank you, all of you, for this contribution. It's a very interesting discussion. Don't hesitate to ask questions at the end if you want to know more about everybody's processes. We had a question about the share of minimalist versus maximalist approaches within the audience. If you could show it, please, Natalia. So I don't know if you have some the ability to answer. It's a very interesting take. So far, if you want start about our clients, it's 2 versus a dozen in terms of stats and France. So it's a bit maybe different than in Germany. So it's very interesting to know about that. Okay. The I don't know answer is very interesting. We want to know more.
Maybe it's wrong hot for
So I'm waiting to reach 18 again, maybe. But what is very interesting is that it's a 27% maximalist approach so far. Maybe it's being in Germany that changes the answer a bit, so it's very interesting to see that. So it's a good share of it. And so it shows that a majority still of the multinational enterprises are focusing on getting as much value from the transactional safe harbor as possible, which in the end may be awarded by the permanent safe harbors that are coming, because one of the main issues with Pillar 2 is, the maximalists are starting to gain traction, I think. Very interesting. But I think the main point is that it's not a very stable legislation right now. So I think a lot of groups are also waiting to see how long-term all of this will be. We've seen that Pillar 1 is a bit less fast-moving than Pillar 2, and with the bit of instability that we have in the other side of the Atlantic, with some of the Trump randomness that happens, well, maybe investing too fast may in the end have incurred some costs that will not be recuperated, and they will not be reimbursed like the custom rights. So the question that I have now to Marta, who knows a lot more about the US than we do, at least that I do, is what is the impact of this differentiation from the US and the side-by-side system, and see how you are able to adapt and the impact on your technological choices.
Yeah, I think it's kind of painful, probably, discussion a little bit when we are talking about the US currently, but I wanted to go back to last year, I believe May, June, when all the discussion about Pillar 2 and US joining or not joining the global agreement on this was in question, and then US came up with the idea of so-called Section 899. So some of you who have some connection to the US would know that it's this retaliatory measure to kind of penalize the European side, so to say, when the Pillar 2 would go ahead and the US would stay outside of that agreement, right? I'm actually happy that it was not introduced as many of the businesses, because it would result in double taxation for the US-based groups with European businesses. So it was dropped, but as the trade-off for this, the US insisted on this side-by-side approach. Basically, it was the agreement within G7 to agree on side-by-side approach, meaning that the US guilty regime, which is basically similar to what Pillar 2 is trying to achieve, is to bring the taxation to the level of minimum tax, that it will be acceptable from the Pillar 2 perspective on the same level as the Pillar 2. So basically, US didn't join the Pillar 2 initiative, but US is the only country which is now accepted by Pillar 2 government body, right, as the one that which regime qualified for Pillar 2 exceptions in a way, right? For us as US company, I can tell you that guilty is something we are doing since I joined the group. Many years ago, and the impact that we see for guilty is quite significant. So we have really guilty inclusion in the US, and we pay taxes in the US, which is 21% federal tax rate, which is quite significant, tax impact for us as US tech company. And the Pillar 2, if the consensus would not be reached on side-by-side approach, would result in additional double taxation, basically, for our business. So we would be hit by, additional taxes in Europe, and we will have inclusion in the US. And then under the treaty, this is something that you cannot really get the credit for this, because we all know that treaty would not probably cover the Pillar 2, taxes. And the current situation where we are now, we are calculating guilty. We have guilty inclusion, which is now called net CFC taxable inclusion, taxable income. That meaning basically the same, which is the name has changed and was a little bit of 40 instead of 50% reduction on the US side, and a little bit higher percentage of tax. But generally, we are talking about the parallel system that we are living in, and the difficulties I see for our companies, both in the US and in Europe, is that we will be facing this qualified domestic minimum tax rate that will still be applicable at the local level. So even if side-by-side approach would actually eliminate double taxation to the highest extent, right? But at the same time, we will still be facing the minimum tax, basically, in some countries that would insist on this, right? So I would say we are now in this situation where we are waiting, and to see what will happen, in the coming months, because the implementation is about to start in June 2026, right? So this is when we would need to file the reporting. But we are already now following, I would say, maximalist approach that Jan is following. So we are now collecting data from all our jurisdictions where we are active. And we are keeping this data with tax department, not with accounting, but with tax department, to make sure that we have control over the data that we are collecting. And whenever we have changes, as I said, we have the connection, from top-down approach where we are saying whenever the change is happening in legal structure, new acquisitions, new businesses, whatever the structural changes are, we are the one who will be informed in the first place, just to be able to react quickly.
Thank you, Marta. What I find very interesting as an engineer that works in tax is to see that countries are working to design systems, but they are actually not designing systems. Most of the time arguing on sovereignty issues and discussing political topics, and the people who are paying the bills in the end are the companies and also the software providers who have to rewrite a lot of code every time that there are some changes. So in the end, a lot of more coordination is always better and makes everything more simple, especially for the technological choices, because as we've seen, they are very complicated to set up. They require a lot of data, and all of the changes and all the duplications or alternative ways of managing these issues creates a lot more processes to manage and creates more costs. Thank you, the three of you, for this presentation. We are now going to open the floor for questions or maybe remarks if some of you have some. Do not hesitate.
Thanks a lot. We already have questions online submitted, but let's see. I mean, it would be nice if someone actually asked the questions live. All right, okay. There's a question.
So maybe one question regarding the double taxation or under guilty or negative and Pillar 2. Would that also apply in your case if you make use of the blended CFC safe harbor?
So this question for me, right?
Yeah.
Well, that's an interesting one, because right now we are looking into CFC right from US perspective, because that's why we have a different name even for the guilty regime, but we are not able to blend those. So in our case, in our group, so we in most countries we do not have any opportunity to offset, the results. So we are profitable in all jurisdictions basically where we are, except in some US companies. So basically for us, it will not have any effect as such, considering that we are, on cost plus or even margin level. But to your point, if you have in your group such cases where you have the opportunity to offset, because this is what Pillar 2 basically is giving you as the opportunity to offset, I would say, well, that depends on your structure. Because from guilty perspective you can do it, but from Pillar 2 I believe you cannot blend it, because you are looking at jurisdiction results, right? And this is where you will have discrepancies. And what side-by-side approach is actually achieving, that you will if you're a US company, you will calculate your guilty portion. It will stay in the US, subject to 21% if you have guilty inclusion. But at the same time, you will be exempt from the Pillar 2, right? The income inclusion rule and under-taxed profits, right? But for certain countries who adopted the qualified domestic tax rate, this is where you will be caught, and this is where double taxation will probably,
Thank you, Marta. Can we take one of the questions that came from?
Thanks a lot.
No problem.
Yeah, I'll give you one short one. I'll pick the first one. Did you really feel that Pillar 2 is modernizing your tax function?
So who wants to answer?
We both can. I will just shortly say yes to quite a big extent, because actually, as I mentioned, we have the structured data, and now we have finally a system where we can exploit the data in a very reasonable way also for the governance function. So you are almost all head of tech department, so you need to have some overview of what is the situation in the particular country and so on. But not just that, you need to have it most likely in the future on a very I would say, pre-planned level. So on a monthly basis, you can see the developments in that particular line in the VAT that gives you the indication that maybe there is something wrong, there was some transaction which was not treated properly, and so on. So in our case, that was really the case, that it led to modernization of the data scheme.
One sentence to add, I fully agree. And if you start collecting this kind of data and get the understanding, you get new ideas what you can go looking forward, how you can structure your data, maybe from forecasts and budgets. So it gives you quite some idea what could be done with this data if you have the information. So definitely helping the text function.
So thank you Sri, for this panel. It was very interesting, and I hope everybody learned a lot. I'm gonna give the floor back to the organizers. Thank you.